Hey guys, welcome back. It's me, Adam. You're watching Steady Invest, and in this video, we're going to be talking about my favorite Canadian stock. It's Brookfield Renewable Partners, ticker symbol BEP.UN, and it trades on the Toronto Stock Exchange. There's a lot to like about Brookfield Renewable. First of all, they have a lot of room for growth ahead of them. They're still at good value, and they're not overpriced. As well, they still yield a pretty decent dividend, despite how much the stock has run up over the last couple of months. As well, their future returns should be predictable over the upcoming years, despite the variety of economic conditions that we could be facing. So we're going to be taking a deeper dive as to why I like this stock so much, how much of it I'm buying right now, and what my future price targets are. Before we do, if you haven't already, smash that like button. If you're new to the channel, welcome aboard. Hit that subscribe button, and let's get to it. Alright, so the first thing we have to take into account is that there's a partnership that trades under the ticker symbol BEP.UN, and there's also a corporation that trades under BEPC. They both track the same underlying business. However, back in the summer, BEP.UN spun off into the corporation. So since that point, back in July, the corporation has gone up 63.47%. Whereas with the partnership, it went up in that same amount of time, 34%. They do trade independently of one another, and the partnership as of now pays a 3% dividend, whereas on Google here, it doesn't show you the dividend yield. However, it will be lower because the share price is higher right now. The distributions are the same. They're declared and paid at the same time, but there are differences depending on taxes, depending on where the investor is living. And the main reason Brookfield's making corporations for the subsidiaries is that some institutions aren't able to invest into a partnership depending on their jurisdiction. So this allows more exposure to more money. And we'll see the impact on this later on in the video. And just because the corporation has outperformed the partnership so far doesn't mean it'll continue in the same manner going forward. Alright, so what is Brookfield Renewable? They are one of the largest publicly traded renewable power platforms in the world. They exist in North America, South America, Europe, Asia, and we'll keep on seeing this over and over again. Its investment objective is to deliver long-term annualized total returns of 12 to 15%. And I believe them. Brookfield's one of the best managed companies in the world, in my opinion. And this includes annual distribution increases of 5 to 9% from organic cash flow and project development. It has an established track record of creating value by prudently acquiring, building, and financing assets and actively managing its operations. They are a global leader in hydroelectric power, which comprises approximately 64% of their portfolio. They also own, operate, and invest in wind, solar, distributed generation, and storage facilities. This company is an absolute growth monster that cannot be stopped. Looking at their portfolio, we can see $29 billion in total assets in North America, $11 billion in South America, $11 billion in Europe, and $1 billion in Asia, totaling $52 billion in total assets and 19,400 megawatts of capacity. Looking at the all-time chart, we've been trading sideways, growing steadily, and then all of a sudden in 2019, huge spike, up 153%. We see the March crash where it dropped 27%, but since then, it's up 81% since that peak. It'll be interesting to see where the stock price goes from here, if we continue seeing growth, if we see a pullback, or if we trade sideways for a while and let the stock rest for a little bit. But again, when you're investing in fundamentally sound companies, time in the market always beats timing the market. Decarbonization is a global objective. We know with global warming and all the initiatives right now with the environment, this is the direction that we're heading in, renewable energy. This is a growing sector, and Brookfield's going to be one of the world leaders. We see increasingly ambitious corporate targets. By 2025, Amazon, Walmart, and Nike, huge retailers of the world, want to go 100% renewable, Microsoft carbon negative by 2030, Amazon net zero carbon emissions by 2040. Again, this is the direction the world is moving into in the future. It's cost effective. Wind and solar are the cheapest sources of bulk generation. And how has the recession impacted these trends so far this year? US electricity generation is down 5%. Over the same period, fossil fuel generation is down 10%. Meanwhile, renewable generation is up 14%. Again, a growing sector, and investors are seeing this as well. And significant capital will be invested into renewables. So over the last 5 years, there's been $2 trillion invested. Over the next decade, it's projected to be $5 trillion to $10 trillion. That's a lot of money. And Brookfield is well positioned with over $50 billion of operating renewables and still growing. Again, we see 12 to 15% returns on long-term impact, and this is why I believe Brookfield's one of the best managements. So they have a ton of money, $3.4 billion in available liquidity, and that's without mentioning they're 60% owned by Brookfield Asset Management, which are their parent organization, and they have a ton of money. Brookfield Renewable is one of their many subsidiaries, and they use their cash purposefully. So step 1, they invest based on a value basis. They find good deals and then they buy them. Step 2, they grow these assets, invest in them however they have to, and then they just run themselves, their money-making machines that give you more money so that you can invest in more good deals. 20% year track record. We see the S&P 500 annually has been gaining 6% on average, whereas BEP was gaining 18%. And remember, they're going for 12 to 15. And over the next 5 years, they're going to be increasing their targeted annual equity deployment to $800 million to $1 billion. They're planning on spending a lot of money. And they have it all planned out: deep value, long-term focus, partnership approach, environmental, social governance oriented. We see big names that they've partnered up with: Verizon, Facebook, JP Morgan. And we can see here from October, just about a month ago, on the 27th, JP Morgan Chase and Brookfield Renewable launched collaboration to power over 500 offices and branches in New York with 100% renewable electricity. We can see the resilience even through the pandemic. Approximately 98% in asset availability, roughly $1 billion liquidity added to their balance sheet, $2 billion plus deployed in capital, and an executed strategic merger with Terraform Power back in July. And this had many benefits on its own: simplified ownership structure, it helped grow cash, it helped expand their portfolio in North America and Europe. And when they made the corporation BEPC, they joined more ETFs, bringing more money into the company, giving them so much more exposure to investors. And on November 4th, they came out with a press release. They announced strong third quarter results and 3-for-2 stock split. So whether you have BEP or you have BEPC, unit holders will receive an additional 1.5 of a unit for each unit held, aka 1 additional unit for every 2 units held. And as a side note, this is why I'm so into the stock market myself, because there's no 2 days that are the same. There's always news, there's always something, that's different about each day than the last. And whether it's a stock crash or a stock going up parabolically or some crazy news, especially this year with all the news happening. But I mean, that's one of the big reasons I like the stock market so much. But moving on. And comparing Brookfield Renewable Partners with Tesla, we can see the price to sales ratio. We see Tesla skyrocket over the last year. That's because with Tesla, the fundamental business is still the same, but all this money's coming into the share price. But their sales haven't increased nearly as much to reflect that. Whereas with Brookfield Renewable, remember how much it went up since 2019? Yet its price to sale ratio remains stable. Looking at gross profit margin, Tesla's at 20%, whereas Brookfield's at 64%. And even with operating margin, at Tesla at 4.75% and Brookfield at 32%. And don't get me wrong, I'm also a Tesla fanboy, but we're comparing apples to oranges when we're comparing how old these companies are and how sustainable they are, their growth stories, their circumstances. There's way, way, way more to these companies than just these graphs over here. Now, when it comes to price targets and how much I have of the stock right now, I started buying the stock back in the spring, summer when it was about in the 50s. And with all the research I've been doing, as well as Biden winning the election, supposedly, I've absolutely fallen in love with the growth story of Brookfield Renewable. They're a tremendous growth story. They're currently yielding a 3% dividend. And considering where I think the stock will be trading in the upcoming years, I think this is an absolute bargain right now. Though it is difficult to buy up after it's gone up 81% since March. As of this recording, it makes up about 3% of my portfolio. But if we start seeing levels of 65 and under, I'll definitely be wanting to add more to my position. If it goes higher from that, I might average in more, but maybe not as much as I would if it had gone down. And that's why I think the return on Brookfield Renewable will absolutely shatter that of the overall market over the upcoming decades. With any long-term investment, you can't just focus on one thing, you have to look at the entire picture. So you can't just focus on value, or the CEO, or the growth potential, or the fact that it pays a big dividend. You have to look at every variable together and make a sound decision based on all the information that you know. And looking at Brookfield Renewable and the prospects of that entire sector and how it's managed, and again, the value, the growth, and the dividend that it does provide. It's a stock that I can look at in my portfolio and feel very confident about. That even if it were to drop 10, 20, 30, 40% or whatever it may be, I'd be happy picking it up on the way down and lowering my cost average. And that's it for my video. Thank you very much for watching. Let me know in the comments below, what do you think of Brookfield Renewable? Are you a shareholder? Is it on your watch list? Are you staying away? Let me know. As well, if you haven't already, smash that like button. It helps my videos get out there. As well, if you're new to the channel, welcome aboard. Hit that subscribe button. If you're in Canada and want to get started with Wealthsimple or Questrade, use my links below and we'll both get free money. See you guys in the next video.